me, as always. And the BRT letter, what does it say and what doesn't it say to stakeholders?
Well, the BRT letter is building on a tradition of understanding of where the shareholder falls into the importance level for a company. So it goes all the way back to 1932 when there was a bit of an article in the HBR that said shareholder primacy was the most important consideration for corporations. The Business Roundtable as late as the 90s affirmed that and basically said that companies should consider the shareholder as the prime stakeholder in their operations. The letter that came out earlier this year broadens that spectrum a little bit more. It does not degrade the shareholder, does not take the shareholder out of the mix, but it basically says there are other components of the stakeholder spectrum that companies should consider. Employees, clients, customers, suppliers, things that have material impact on the operation of the business, but are not necessarily called out by name in things like financial filings.
All right, so what about the business community, the investment community, SRI and ESG? How have they responded to the BRT?
It's been a mix. I mean, most have applauded it. It has changed the conversation a bit in the United States in particular, as we start to look at the impact of ESG and sustainability on markets and how it becomes a mainstream idea rather than an outlier idea. The ones who have been against it tend to have said that it hasn't gone far enough, or that there's no reporting apparatus tied to it. CEOs can put their names on a letter, but it doesn't necessarily mean that performance will improve. The ones that applaud it seem to think that it could open the door for more shareholder activism or more entrees from shareholder into the engagement process because they are legitimized by broadening the stakeholder label.
So do you think there's a specific reason why this discussion is so relevant right now?
I do. I think that first of all, you've got CEOs around the country are more willing to be open and on the record about social topics. So we have this example, we have a letter that was sent about immigration, we have a very recent letter about gun control. So CEOs tend to be a little bit more willing to be on the record on issues like this. There's certainly an unstoppable rise of interest in ESG and ESG investing. So anything that plays into the ESG business case around investing tends to get a lot of attention around right now too. And then I think that there have been a number of crises in corporate circles that have brought attention to the need to try to forecast better how companies are performing. So we've seen it with PG&E, we've seen it with VW, we've seen it with Wells. The theory goes that if we knew more about these companies, how they were operating, what their risk resilience was in an ESG context, that we would be able to avoid these kinds of bad guesses.
All right, now to wrap up here, do you think momentum in ESG activity is going to be affected one way or the other?
I really don't. I think it's sort of unstoppable at this point. It's certainly unstoppable in Europe and Asia. We've seen an explosion in indexes. MSCI earlier this year said it's the largest growing part of their business. I mean, there's just so much activity and product creation going around in the ESG space. I can't see this fundamentally derailing it or even fundamentally enhancing it. It's almost going on its own path. And I think that there are regulatory drivers that are happening elsewhere where investors are sort of compelled to be involved in ESG that are sort of trickling into the mindset of the US market too. So that will also drive things forward.
All right, Evan, thanks so much for the insight. Appreciate it as always.
Yeah, great to be here.
And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.